Hey everybody. So a bunch of people have reached out kind of struggling with this cash and accrual basis problem or this section of the review. So I'm going to try to go through it and see if that's helpful to everybody. Um, Instead of working it all out, I'm just going to show the answers and kind of talk you through why they are. Um, what we're supposed to be doing is recognizing the difference between the cash basis for accounting and the accrual basis for accounting. Recognize that under the cash basis for accounting, we record revenue when we receive cash and expenses when we pay them. Uh, and that's it. Whereas under the accrual basis of accounting, we record revenue when we earn it, regardless of when we get paid. And we record expenses when we incur them, regardless of when we pay the money. So that's the big difference. So here's our example. The Blue Nile law firm prepays for advertising in the local newspaper on January 1st. So the law firm paid $900 for 6 months of advertising. So under cash basis, we would say that we pay that cash payment on January 1st, and the amount is 900, and we record our expenses on January 1st, and the expense recorder would be 900, because under cash, whenever we pay money, that's when we record the expense. But under the accrual basis, we're going to show our cash payment is still January 1st, and the amount is 900. But then we're going to record the expense at the end of each month. So January 31st, February 28th, March 31st, April 30th, May 31st, and June 30th. And we're going to do 1/6 of that total amount, or $150 in each of these months. In the end, our total will be 900 either way. It's just that under the cash basis, we claimed it all as an expense in January, and under the accrual basis, we claimed $150 per month for 6 months, because we incur the expense for advertising on a monthly basis each month that we have our advertisement running in the paper. All right. The second one, Secure Home, provides home sitting for people while they are away on vacation. Some of its customers pay immediately after the job is finished. Some customers ask that the business send them a bill. On December 31st, Home has collected $200 from cash-paying customers. Secure Home's remaining customers owe them $1,900. So under a cash basis, we're going to show the cash received December 31st. And we're going to record the $200 as a revenue, that's the amount of cash we received. And then we're going to record that as revenue on December 31st as well, of $200. And our total will be 200. So again, cash, we record it when we receive the cash, we record that as revenue. In an accrual basis, though, we're going to put that our cash is received, $200 on December 31st, and our revenue is also recorded on December 31st, but we're going to record the full amount that was owed to us, which was the 200 we received plus the additional 1,900 owed to us, or $2,100. So our answer is 2,100 in revenue recorded. So our total revenue will be 2,100 under accrual, but only 200 under cash. What will happen is in the future, in the next month, when we collect the rest of the money that's owed to us, we'll record that as revenue at that point under the cash basis. Whereas with accrual, we've already recorded it because we've earned it, and now we'll just show our cash going up as we collect it. And then the third one, Splendid Occasions receive $4,000 for services to be performed for the next 8 months. So again, under a cash basis, we would put the date March 31st, record the cash of $4,000, and then do the same date and the the revenue of $4,000. Because whenever we're using the cash basis, we go ahead and we do the revenue when we get the cash. Under the accrual basis, we'll show that we received the whole cash, $4,000, on March 31st. And then at the end of each subsequent month, so April 30th, May 31st, all the way down for the next 8 months, we will record 1/8 of that cash we received as revenue, or $500 each month. By the end, we'll have recorded the full $4,000 as revenue, but we're spreading it out across the months when we're earning it, not just recording it when we get the cash. So that's the first portion, or 1A, under the adjusting entries. All right, so under 1B, now it wants us, and I think I'm going to go ahead and work this one out if it will let me. No, it won't, because I'm in preview mode. So I'll just have to talk you through it. So under 1B, we're to read the transactions and fill in the cash basis, accrual basis table. So again, they're trying to get us to see the difference between these two bases of accounting. So for each one, so on May 1st, we prepaid our rent for 3 months. So we put the date here, May 1st. Under a cash basis, we're going to record the expense, and this wants us to do expenses as negatives and revenues as positives. So we're going to record negative $2,400 because that's the amount we paid out. On an accrual basis, we're not going to record any cash at all. So it's just going to be zero. I mean, sorry, any expense. What would happen in real life, our journal entry would show our cash going down and our prepaid rent asset going up. That's what we would do when we prepay the rent. But there's no revenue or expense for that transaction. The second transaction is received and paid the electricity bill. So we'd put in May 5th here. And then under a cash basis, we do minus 200 because we paid out $200. Now this one, because we actually incurred the expense already of the electricity bill, we're also going to record a negative 200 here. So whenever we pay cash at the same time when we've incurred the expense, our cash basis and accrual basis will be the same. So in this case, it's an expense of $200. On May 9th, we received cash for meals served to customers. So again, because we received cash on May 9th, we'll go ahead and record $2,100 in revenue, or a positive $2,100. And because we've already served the meals to the customer, we've earned it, so we'll also record it as a revenue here, $2,100. May 14th, we paid cash for kitchen equipment. So under the cash basis of accounting, if we paid out money, we're going to go ahead and we're going to record that as an expense. Why? Because we paid out cash. But under the accrual basis, what we're doing is our cash is going down and our asset equipment is going up. So we're not going to record an expense at all at this point. It's going to be zero. We'll record the expense as we use up the equipment. May 23rd, we served a banquet on account. On account means we haven't gotten paid for it. So under the cash basis of accounting, we'd say that's zero. But under an accrual basis, we'd say, no, we already earned that money. So we're going to record $1,900 in revenue, or a positive $1,900. On May 31st, we made our adjusting entry for the rent from May 1st. So May 31st, it's going to be zero under cash-based accounting because we didn't collect any more cash on May 31st. We collected all the cash for the rent. I'm sorry, not collected. We didn't pay any more cash. We paid all the cash for the rent back on May 1st and recorded the full amount then. But if you remember, on May 1st, under an accrual basis, we recorded zero. And now we're going to claim the expense for 1 month's worth. So if it was $2,400 for 3 months, divide $2,400 by 3, that gives us $800 per month. So we're going to enter an expense of $800, or a negative $800. May 31st, accrued salary expense of $1,600. Accrued means that we recognize that we owe it to our employees, but we haven't yet paid it. So under a cash basis, it's going to be zero because we haven't paid it yet. But under an accrual basis, we're going to go ahead and put that expense in, or a negative $1,600 in. Finally, we have May 31st, recorded depreciation for May on the kitchen equipment, $400. So again, there'll be no depreciation for equipment under a cash basis because we went ahead and claimed the whole amount we paid as an expense. So that'll be zero. And under accrual basis, we would go ahead and recognize that expense. That's us beginning to recognize the expense of this kitchen equipment spread out over the useful life of that equipment. So we'll put a negative 400 or an expense of 400 on May 31st. All right, one more. I think it's just one more. Yeah. And this is a little bit harder because it makes you kind of work it out on your own. So the Orange Lily Law Firm prepays for advertising in the local newspaper. On January 1st, the firm paid $2,390 for 6 months of advertising. Orange Lily Law Firm recorded $2,390 in the prepaid advertising account. Let's see. So we're supposed to figure out if they're using cash or accrual basis. So if they were using a cash basis, they would just call it all advertising expense, and that's it. But under an accrual basis, they would go ahead and use a prepaid advertising account, which is an asset which shows that we have a claim to advertising in the future. So we're going to say this is accrual basis. If Orange Lily Law Firm had recorded their expenses using the other method, how much advertising expense would they have recorded for the 2 months ending February 28th? And we would say for a 2-month period, they would have, if $2,390 is 6 months worth, then we divide that by 6, and that's $398.33 a month. For a 2-month period, we'd say $796.67. Oh, wait a minute. Oh, I'm sorry, I tricked you guys. So this is actually, if we were using the other, which is cash, we wouldn't try to see. This is how I tricked you. Under an accrual basis, we would take off 1/6 of that each month, right? We would record that as an expense. But under the other method, which would be a cash basis, we would go ahead and just write off the whole amount as an expense when we pay it. So $2,390. Safe Home provides house sitting for people while they're away on vacation. Some of its customers pay immediately after the job is finished. Some customers ask that the business send them a bill. As of the end of the year, Safe Home has collected $1,280 from cash-paying customers. Safe Home's remaining customers owe the business $1,300. Safe Home recorded $1,280 of service revenue for the year. All right. So again, we're supposed to say, are we using cash or are we using accrual? So it says we've collected $1,280, and our remaining customers owe us $1,300, and we recorded $1,280 of service revenue for the year. So here we could see that they based what they recorded as revenue on what they collected in cash. So we're going to say they're using the cash method or the cash basis. And then it says if Safe Home recorded their service using the other method, how much revenue would they have recorded? And it would be all that they've earned, which is the $1,280 plus the $1,300. So $1,580, or I mean $2,580 would be the amount that they've actually earned. Splendid Occasions received $1,700 for services to be performed for the next 8 months on March 31st, and recorded this transaction using the unearned revenue account. So again, unearned revenue is an account that only gets used on an accrual basis, and that's because under a cash basis, we would just record it all as revenue when we got the cash. So this is accrual. And then it says, if Splendid Occasions had recorded their service revenue using the other method, how much service revenue would they have recorded for the year? And the answer is the whole $1,700 that they received, because that's what you do in a cash basis. All right, now this last one, I'm going to go ahead and bring up an Excel spreadsheet, as it will help us with this last one. All right. So it says they had the following transactions, and we're supposed to figure out if they recorded the transactions using the cash method, how much would their net income be? And if they'd done it with the accrual method, how much would their net income be? So I'm going to just create 2 columns. One says cash, one says accrual. And I'm going to use the same methodology we did on the last problem, where we just put revenues in as a positive and expenses in as a negative. On May 1st, I prepaid the rent for 3 months. So under a cash basis, I'm going to call that an expense of $1,200. But under an accrual basis, I'm going to say there's no expense there. Instead, we're just creating an asset called prepaid rent. On May 5th, make this a little bit bigger. On May 5th, we received and paid the electricity bill. So under a cash basis, since we paid it, we're going to say that's an expense of $60. And under an accrual basis, since we have incurred the expense already, we're also going to call that an expense of $60. May 9th, we received cash for meals served to customers, $370. So under a cash basis, since we received cash, we're going to call that revenue. And under an accrual basis, since we earned that, we're going to call it revenue. On May 14th, we paid cash for kitchen equipment. So under a cash basis, we're going to say that whole thing's an expense, $3,780. But under an accrual basis, we're going to say, nope, we're just putting money into an asset called kitchen equipment. There's no expense happening yet. The expense will happen later when we depreciate that equipment. So we're going to say 0 in expense on 14 May under the accrual method. May 23rd, we served a banquet on account, meaning we didn't get paid for it. So since we got no money under cash, we're going to say there was nothing there. But under accrual, since we earned it, we're going to record that as a revenue of $2,340. On May 31st, we made the adjusting entry for rent on May 1st. So under cash, that's going to be 0. Why? Well, because we didn't pay out any extra cash. We recorded the full expense up here on the 1st of May, negative $1,200. But on May 31st, under the accrual method, we're going to take 1/3 of that $1,200. Why? Because here it says we prepaid the rent for 3 months of $1,200. So if I say this equals 1,200 divided by 3, it's going to be 400. So our expense is $400 for the rent. On May 31st, we accrued salary expense. Again, that means we didn't pay for it yet. We just recognized our employees had earned it during the month. So under cash, it's 0, but under accrual, we're going to recognize that full expense because we incurred it during the month. Negative $1,480. On May 31st, we record depreciation for the kitchen equipment, $0 in cash. But under the accrual method, we're going to recognize that an expense. That's how we're recognizing that cost of the equipment that we bought up here. So our net income, if we remember, is just the sum of all of these, our revenues minus our expenses. So under the cash basis, our net income is going to be negative $46.70. And then under the accrual basis, our net income is going to be positive $180. And that's it. I hope that was helpful to you. And if you need help, don't be afraid to reach out. I will do my best to help you every chance you give me to help. Have a great week, and hopefully you can finish this up the way you want to.